What is up, Canada? What is up, YouTube? Matt McKeever here. And so this is going to be a little bit different. I've got a special guest, another Canuck. Hey, Griffin, how's it going?
It's going great. Yeah, fellow Canuck. That's true. I'm from Ottawa, for those of you who aren't familiar with me. Yeah, also a fellow YouTuber here on YouTube. I speak about real estate investing, stocks, and investing in general. So yeah, super excited to get into this today.
Awesome. So yeah, I'll maybe set a little bit of context for anyone that's jumping on the live stream. So this is just kind of a new experiment for me and Griffin. So I believe this is Griffin's very first live YouTube video. So everyone can play nicely with him. Obviously, I'm going live a couple times a day now. But the one thing that stands out to me when I'm going live is it's sometimes a little dry talking to myself. So I thought it'd be great to bring on, another great Canadian content creator like Griffin and really just talk about investing. So, he does both real estate investing, but primarily on his YouTube channel is often breaking down, paper asset investing. So stocks and, different ETFs and things of that nature. And at the same time, he's also exposed to real estate. Obviously, I'm way more in the real estate, though these days we're also going a little bit crazy on crypto. So thought this would be kind of a nice little spectrum of different investing discussions. So if you guys have any questions, jump in the comment section. Feel free to hit up Griffin with any questions. And one other thing, if you guys are interested in seeing this become a reoccurring feature, either on my channel, Griffin's, or maybe we started a third new YouTube channel, let us know in the comment section, what should we call this? So I think we're just using right now Canadian Millennial Money as a placeholder, but I'd love to hear, is that the name we should use? Is there some sort of playoff Canucks or something funny we can do with Canada? Let us know in the comment section. But I guess because we're fascinated with real estate on my YouTube channel, Griffin, I know you've been on once or twice already, kind of explaining your perspective with investing and breaking down an existing deal. But I don't know if this video came out on your channel yet, but I saw you teasing that you're kind of making a big video around your real estate portfolio and how things have evolved. So if the video's not out, you don't need to spoil it. But if you don't mind maybe teasing us with a little bit of context.
Sure. Yeah, let's do it. I posted a little teaser there on my Instagram. Essentially, I've been real estate investing for the better part of 2 years now, which in the big picture isn't that long, but in that period of time, I've now purchased and sold and refinanced about 5 different properties. And so really, I speak all the time about, paper asset investing and the whole idea of compounding. And, we're all familiar with that. But the idea of real estate investing and also compounding, like your equity that you're able to roll into more deals and stuff, is something that I think a lot of newer real estate investors maybe don't fully understand or fully comprehend the power of that, how you can also compound your real estate investing. So yes, it's going to come out actually on Thursday. I decided to make a video speaking about how I purchased a property. Most of what I do is I like to do BRRRR deals. So buy them, renovate them, refinance, repeat them essentially. So yeah, that's a video that I'm really looking forward to doing. What's your take on, I know you're a big BRRRR investor, or at least you used to be.
Yeah, so these days we're still doing BRRRRs. I'm just less hands-on. So we're BRRRRing apartment buildings now. So,
big game.
Yeah, it's the exact same thing. It's just now we're playing with the red hotels rather than the greenhouses, right? And Monopoly. And so I think we just did a refinance on one of our apartment buildings we bought right before COVID. And I want to say we bought it for 1.615 and we got reappraised for 2.7, 2.8, and we maybe had half of that in renovations and kind of repairs and things of that nature. So definitely this environment is relatively favorable for BRRRR investing as long as the fundamentals work, right? So as long as you can cash flow after you refinance out, you can navigate things and make it work. But I think the real key is finding the deal on the front end, right? And a lot of people right now are losing out to bidding wars. They're just getting their emotions caught up in the real estate investing market. And I think that it's more important than ever to focus on the data. And there's so much drama out there. It's so easy to get caught up with your emotions or what other people are doing, or kind of have that over the shoulder syndrome where you're constantly trying to check to see what your competition is doing. When you really know what you're doing, it's just so much easier. And so I'm curious, Griffin, when you started real estate investing, did you start with a specific investment thesis, a specific plan?
Honestly, no, I didn't. I just knew that I really wanted to start investing in property to diversify my assets, what I'm holding in my entire portfolio. And so for me, it really just started reading books, watching YouTube videos. To be honest, one of your first videos about BRRRR investing, and actually the cash out refinance one on the whiteboard you did a while back. Yeah, these are the types of videos that really got me interested in it. And to me, just the idea of having tenants paying down literally and purchasing an asset for you was what really attracted me to it. And then I kind of got my first deal and just fell into BRRRRing that property without even really planning on it. And I know that sounds kind of ridiculous, but the point being in all of that is, yeah, I'm a firm believer in just jumping in and learning as you go. Obviously, as you scale up your portfolio, you can't be doing that on everyone. You need to know your numbers and all that. But yeah, for me, like if you're purchasing a property that's cash flowing anyways, you'll have more leeway and options for doing something with it as you wait to strategically do something with that property. It's still paying for itself. So so yeah, I see a couple new comments coming in here. New YouTube show. Yeah, hopefully, possibly we're going to be doing this maybe on a weekly basis.
And so did you originally get into, I'm assuming stock investing came first before real estate? And
Yeah,
what was your gateway for real estate investing?
Stock investing, of course, it came first. It's so much more accessible, right? Especially now with everyone using mobile brokerages and discount brokerages. But the gateway for real estate investing, literally, well, what do you mean by gateway? What was the catalyst for wanting me?
Yeah, I guess I almost use that I almost use that just as an internal joke here now. We're like the gateway drug for real estate investing. It's Rich Dad, Poor Dad. So I guess was there a gateway drug or a gateway book or a great gateway person? Maybe it was an aunt and uncle that was stock investing. What originally made you think hey, as a young person, I can invest in stocks? Because I think it's easy for us to forget that that we're kind of in a bubble here, right? You're a millennial talking about real estate investing. I'm an old millennial talking about, or maybe you're a different generation, but whatever. Talking about real estate investing, and I almost take it for granted that people understand basic financial fundamentals. They understand the idea of compound interest, return on investment, things like that.
It's not though.
Yeah.
It's really not. Yeah.
What kind of got you into that mindset?
Yeah. So I'll be real with you. Yeah, this right here was definitely a gateway, like most people, I think.
Yeah.
Right? It's just such an easily consumable book. Even a person in the comment, my gateway drug was Rich Dad, Poor Dad. But it was just curiosity. Ever since I was a kid, I really enjoyed finances, even though I didn't know that's what it was at the time. I knew I was interested in money essentially. And stocks was always something that interested me. And then as I entered into university and business school, of course, we're talking stocks with fellow classmates and stuff who are interested in the same type of thing. How about you? What was your gateway? I'll throw that back on you.
Yeah, so I was already obsessed with stocks before I found Rich Dad, Poor Dad. I originally found the book Rich Dad, Poor Dad in my last year of university. And I'll just share this story. My audience knows it. But
let's go.
My room, I was living in a house with 5 other roommates, right, doing the university life. And one of my other roommates, he and I were both obsessed with getting rich. We didn't know how we wanted to get rich, but we knew that sounded like a good life plan, right? Let's get rich. It seems like people with money, in general, all other things being equal, they prefer to have money than not, or else they'd get rid of the money they have. So, we're constantly scheming, trying to figure out ways to get rich. And so we're jumping from bad idea to bad idea. There was, and you might have to ask your parents about this, Griffin, but there was one point in time we were talking about starting a importing business for blank CDs. And we were blank CDs are popping off on university campus, right? And blank DVDs as well now. And so we'd started negotiating, and this is before Alibaba, right? So we're negotiating directly with a manufacturer in China. Yeah. And they're like, yeah, we get it on, we'll get it on the ship. You guys take care of it from there. And we're like, yeah, we could probably figure that out. It'll come to the Vancouver port, right? And I was like, Matt's dad has a farm. We can park the sea can on the farm if we have to. And anyways, we almost got burned because we didn't understand about import taxes. And there was a very specific import tax on blank media devices in Canada, which destroyed our business model. But from that experience, we were like, hey, you know what? or this was kind of me thinking about, but I was like, hey, Jake, you know what? Your dad's already rich. Why don't we just ask him how to get rich? And hopefully, like, he'll just give us the secret sauce. And literally the thing he told us was he gave us Rich Dad, Poor Dad and said, read that book. And so I read that book. At that point in time, the copy I had a list of other books, went and read every book. But the way I got into stock investing originally was actually when I was born. So at the time I was born, my mom worked for 3M Canada. And so at that point in time, they were giving a share to each new employee's child that was born that year. So essentially, I got like one share of 3M stock when I was born. And
you're literally like 1 day old and you're stockholder.
Yeah, literally out of the womb, I had a shared certificate. So maybe there's a branding thing there. We can play with that. But in essence, as I was growing up, my parents weren't particularly financially literate, but they weren't also completely financially irresponsible. So they were average Canadians, is what I would peg them as. Sure. And so the one thing that they would kind of have fun with me as a kid with is like, hey, Matt, what's your stock doing? And so this is back in the day of newspapers, and you would actually go and look it up and you'd see the stock price that closed the previous day. And so like every time that's wild, by the way. Time I would get around a newspaper as a kid, I'd be flipping to the business section to see what 3M was doing, MMM, the symbol. And like, there was a bunch of random things that we kind of accidentally learned through that experience. So 3M, one amazing company. If you're going to be investing into, consumer products or anything in kind of that niche, I think that they're a great company for a variety of reasons. But specifically, the period of time that I owned the share was a period of rapid growth for 3M. So they did, the share increased in value significantly. They did multiple stock splits. They had a reoccurring dividend, right, that we were able to enroll into a DRIP program, right? So a dividend reinvestment purchase plan. And through all that, I learned all these random things that honestly I would have never otherwise learned, because I started off with one share, but by the time I was like 20 or 25, it was like 11.5 shares.
And you didn't even reinvest anything, I was assuming, right?
Other than the dividend. Yeah, just from the DRIP. We never cut a check for it. And again, technically, I think when I got that share given to me, it was like $40, $50 at the time. And by the time that it was, when I was 20 or 25, we had like 11 plus shares, and there were maybe $100 a share. So it was over $1,000. So again, I had just seen this natural growth. And to me, that just, it made me obsessed with this concept, right, of investing, of dividends, of passive income. And again, I always associate business with that. So growing up, I wanted to be an entrepreneur. I knew I wanted to own a business, but I didn't really know what business I wanted to own or anything like that. And I really attribute a lot of that to just that one random stock certificate. So one thing I really encourage, and it's been a long time since I did a video on this, but on one of my videos, my War Against Christmas, I talk about how I think people should stop giving gifts. And if you're going to give a kid something, like give them a share in a company that has an SPP and a DRIP plan, especially here in Canada, right? You can find blue chips like some of the banks. You can go through the trust company, right? Whether it's CST or I'm drawing a blank on the other one, Computer Share. But, you can go through these trust companies and literally own these individual stock units, have it involved in a DRIP program as well as an SPP. And I think it creates a level of engagement with the investment that, giving your niece or nephew $1,000 in index funds just isn't going to do when it's a specific company. And if you decide to step outside of a specific Canadian company, I think it's even cool to do with like a Netflix or a Disney or any other sort of brand or business that the child they might have a connection with too, right? Like, I watch Netflix. I watch this Disney program. Because again, that was kind of cool for me with 3M. It was like the sticky notes, right? And like other 3M tape and random things like that.
Aerosol sprays.
We didn't play with those as much as kids, but it was the 80s, so you never know. But yeah, that to me was just a wonderful rabbit hole, or, kind of going down the rabbit's hole like Cinderella and just discovering all these opportunities out there for investors. But you would think with my introduction to stock investing being, a safe blue chip, consumer product oriented business like 3M, you would think that my entire career being a stock investor was simple and well thought out and safe. No, I made a lot of stupid decisions when I was in my very early 20s with stock investing. But maybe before I tell a story, were you smart day one with your stock investing? Were you chasing penny stocks? Like what were your first few investments there, Griffin?
Yeah, I can't go and say that, no, from day one, I was smart with all my investments. No, of course, I think every investor has to go through some period of going all in on some companies that are like higher risk and stuff. And even if you get burned, I mean, you're gonna learn lessons as you go along, right? So let's say 4 years ago, okay, I was totally chasing Ethereum returns. So not the same thing as stock, of course, crypto returns. This was during that first like boom back in end of 2017, right?
Mm-hmm.
This is an example, by the way, of at the time, really fiscally irresponsible investing, right? So I was seeing the price of Ethereum go up like crazy, and I decided, hey, I'm going to build an ETH mining rig, and at the top of the GPU market and stuff. So it took about it was ridiculous. Like at the time, I thought I was super smart. I was probably 17 or 18 at the time. No, I wasn't that. Anyways, so I built that, and it took, like, now I'm way back in my money. It was just a huge gamble, and I was lucky about it. But for about 4 years, like, I learned such a valuable lesson there of like not FOMOing into stuff. And now I apply that to my investing, and I always go for a much longer term approach now to my investing.
I was just going to say the school of hard knocks, can be an expensive teacher, but as long as you're listening, it can also be a great teacher, right? I think a lot of us we almost need to get burned first to know that stove is hot.
Exactly. And at the beginning anyways, like when you start investing, typically you're going to start investing with a couple K. So it's not like it's the end of the world if you restart after a couple $1,000s and you lose it. I'm not advocating going all in on reckless stocks or anything, but it's not the end of the world. And then typically people start coming around after a couple plays like that to, okay, I'm actually going to set up a portfolio that makes sense for me for a longer term style of investing. Like, I know that can sound boring sometimes, but it's just really, in my opinion, the way to do it is taking positions in companies that you believe in longer term and stuff. What's your take on that, Matt? Do you even still to this day have a good stock portfolio, or you're all in on crypto now? What's going on with that?
Yeah, it's a good question. And so I've kind of ebbed and flowed with public equity markets for a while. I haven't had any real significant personal exposure from like net worth standpoint for probably, oh wow, maybe I'm getting old, like maybe 10 years since I've had real significant exposure to publicly traded equities. And that's for a variety of reasons. But, the one thing I will say is for a period of time in my CPA career, I worked for a publicly traded pharmaceutical company. I saw us go from a market cap of about $10 million to $250 million within under 4 years. Okay. And so, when I kind of left pharma, it was, I want to say it was the end of, how'd that work? The end of 2015, early 2016 when I actually left. And for those that maybe don't remember, like at the end of 2015, or no, maybe it was 2016, 2017 is the way it actually played. But anyways, something like that. And it was right during the election with Hillary Clinton and Donald Trump. Everyone knew that Hillary Clinton was going to win. She put out a tweet that was like negative towards pharmaceutical companies that were trying to do the tax inversion scheme we were doing to try and re-domicile in Ireland and Bermuda to like, pay no taxes, like it's the cool thing to do, as a corporate citizen these days. And, it destroyed our market value and destroyed a lot of our competitors' market value because the market had baked in the expectation of this. And in essence,
so that was like a huge indicator for you at how much equities can essentially fluctuate based on info only. Yeah. Is that what you mean?
Yeah, and not even just info, but really rumors, right? Because with hindsight, Hillary Clinton didn't win the election. She didn't pass the reforms that she was pushing for corporate taxes, and after that, we went through a series of acquisitions and mergers ourselves. So we ended up acquiring a company, and then we got acquired by another company. And that's where it really started to make me less than confident, but again, one thing you'll notice if you're the actual dude preparing the financial statements that then go out to the public markets, one of my favorite things to do was go on the bull boards and the bear boards and read people's comments about the financial statements we just put out, because they were almost always wildly wrong. And it was so much fun, though, because
like people's interpretation.
Yeah, there's like, oh my God, I see the matrix now. This is what's going on with that company. And like, they go off on a wild thing. You're like, nope, that's not even been like on our radar.
Yeah,
or like,
I mean, bulletins of stock bulletins are tough. Like, I honestly had to even remove myself from so many Facebook groups because it's challenging mentally. Always seeing like, because everyone thinks they know everything.
And so kind of, as that evolved for me, what I started to realize was it was so easy for people to talk like experts about our company. There weren't there was like maybe one analyst that was half covering us with his eyes cross-eyed. But outside of that, there wasn't a lot of people covering us. There was a couple bloggers that were covering us. And again, even they were often missing the mark, but they were doing much better research than anyone on these bulletin boards or things of that nature. And it just made me realize that, like, wow, some of these people spend a lot of time, have significant net worth, and just randomly, it turns out one of my fans ended up being a significant shareholder in our company during the acquisition phase. So he ended up like, it's a really long and complicated story, but we went through just a wild roller coaster ride of like market cap to market cap to market cap, and all this just upon rumors and speculation and things of that nature. And for me, it was kind of the moment where I was like, you know what? I'm not sure if the emperor's wearing any clothes. Now, again, this is obviously a very personal perspective when it comes to investing. Things are a lot more complicated than even what I'm kind of summarizing here. But for me, what it came down to was I love control. And so for me, when I'm looking at stock investing, I don't have significant influence, right? I don't have direct influence. I can't really control what happens. In some ways, that's good, right? Like maybe you want to bet on Elon Musk. Maybe you want to bet on Bezos, and you think that they're smarter than you. And so you'd rather put your money with them rather than you be in control of it. I think that makes total sense. Or maybe they've got a competitive advantage in the business that you can't do. Again, it makes total sense to me. However, for me as an entrepreneur, I really like the idea of being able to have control or influence over my investment. So real estate, I love it because we can pivot, right? Long-term rental becomes short-term rental, becomes condo, becomes this, becomes that, becomes Matt lives in it if things get real tight, right? Whereas with stocks and other paper assets, it's a little bit more of a challenge from my perspective to see that. But again, it also means that you're not necessarily 100% responsible. So I think that for certain individuals, like index funds can make a lot of sense. And again, investing in individual equities can make sense, but just for the amount of research I see the average person do versus what I believe is the appropriate amount of research, that's often where there's a disconnect in my CPA
Yeah, it's usually
brain.
quite low, that's for sure. But so I'll challenge you on that quickly then. So I completely agree about the real estate thing. Like definitely the level of control is not even comparable to that of stocks for sure. So if you had an issue with certain level of control with stocks, like and you're saying that your net worth right now is very like not attributed whatsoever to paper assets and equities, then what about crypto then? Like, do you feel like you have any more control over that? Because if anything, see, for me, it's kind of the opposite. Real estate, we're right there together. And then I don't have that much crypto, to be honest. Like, and I kind of had the same thesis as you, but inverse. Like, I don't see any control whatsoever on crypto, and so volatile. Like, is it really just on a longer term bet that you're not longer term bet, but adoption Horizon, that you're seeing? Yeah. Like,
for me, again, I'll maybe even compartmentalize or parse out the question a little bit. So I do distinguish between Bitcoin and other cryptocurrency assets. So when it comes to cryptos in general, I 100% agree. I think it's a wild game of gambling that's going on. I think I'm fortunate or in the position where I can afford to sit at some of those gambling tables of NFTs and other things like that and participate. But I do see Bitcoin as a difference in kind of asset versus almost anything else that's existed. I definitely, people like hardcore fans that are paying attention are probably shocked I don't have laser eyes on my profile. They're coming. But I definitely do subscribe to being a Bitcoin maximalist. And for me, it's almost more, this is going to be hard because like part of me wants to be like, Griffin, in 10 years, come back and let's have this conversation. But
hey, I'm not saying it's not.
No. And again, I'm not even saying to that point. I mean, more like, I'm not saying that because crypto is going to be worth a lot more in 10 years. I know that that's a common argument people make. I think it's more my level of comfort and confidence in the existing system, to be honest. And I see Bitcoin as an ability out of it. Like, and again, we don't, if you want to explore it, I'm happy to explore this stuff. But if this is off brand or off topic for you, we don't need to go down this rabbit hole. But I am concerned about things like hyperinflation. You know, I am concerned about the Bank of Canada's assets, right? I'm concerned about trillion-dollar coins. I'm concerned about deficits that seem to never be able to be balanced. And, you know, as I've grown older, my level of confidence in the adults is less and less because I realized I'm one of them. And so, like, when I'm comparing myself to other adults, I'm like, I mean, compared to the average Canadian, I'd like to think I'm relatively sharp. And yet I also know I know nothing. And so when I look at politicians, when I look at world leaders and stuff, I just have less confidence than I did 10 years ago. And so that's more what I mean in 10 years, where I think that, and maybe it's just with age, you become jaded. And I could totally just be like an old man in a relatively young person's body. But yeah, I think that that's honestly it for me. So I see, to summarize, Bitcoin is a unique asset that's deflationary in nature, that's unlikely to experience the same sort of inflation that every other currencies experience, or loss of purchasing power. So for that reason, but in addition, I enjoy the community and the anarcho-capitalist nature and roots of it. I've always been a libertarian at heart as well. So my politics thread well through the Bitcoin universe. But to be honest, like back in 2017, 2018, I remember reading up on it. I bought Bitcoin ATM, goofing around a little bit. I hosted even meetup groups here in London. And I honestly thought it was just way too early. And I had more confidence in the system back then. And, I think COVID for me personally was a time machine. It's like, I got to go 10 years in the future and see what it was going to look like in, 2030. And because of that, my whole risk analysis is different. I think part of it's also when you've got more, it's easier to want to diversify and take money off the table from, 25 and let me think, from 25 until probably 34, 33. I was like, at any given point in time, probably 95% or more in real estate. Right. So like wildly, like,
especially when you're first starting out, it's easy to have such a high allocation to real estate, like in terms of your net worth, that's for sure. Sorry, keep going.
But even with that, like, I knew that it was very kind of, in theory, risky, depending upon your perspective of risk, right? But for me, it was like, when I only have a small basket, let's focus on putting everything in it. As it grows, then maybe I'm going to want other baskets and diversify, because if I drop this, then it's really going to matter if it's everything once I've got a lot. But yeah, that's kind of my general thoughts. So I do know that I've got no direct influence over the crypto markets. So that is a good criticism of what I was saying in regards to paper assets, because I don't have direct influence. The only difference there is no one has direct influence over Bitcoin, in my opinion. I think most other cryptocurrencies have a group or set of stakeholders that have direct influence. And I think Bitcoin is kind of a difference in kind because of that. And so because of that, the fact that no one's in control gives me confidence. It's pretty much when Matt's not in control that Matt's freaking out. But like, as long as no one else is in control, I'm also willing to, Satoshi take the wheel.
Sure. Yeah, that's definitely interesting. I mean, so you're really seeing Bitcoin completely separate then from everything else. I think one of the issues right now that I also see with a lot of newer investors, so we're pooling together, maybe like I was saying crypto, pooling it all together. We can see the same thing in certain stocks, right? Like we're seeing so many small cap stocks right now just going to the moon within like one day. And I think that same sort of phenomenon is going on with all these other altcoins, which, because crypto though is so much newer for a lot of people as a viable asset class that people are considering in their portfolios, like seeing a Dogecoin and stuff like that, for me, I just find is really, it's difficult to take the whole thing seriously. That's my kind of take on it. So
yeah,
do you just hold Bitcoin, or do you take, do you hold it just Bitcoin?
Yeah, so just Bitcoin, and then dabble with some gambling money and NFTs. And one of the things I was actually
I want to talk about NFTs after, because
So I might actually use that as a bit of a segue here. So first of all, I was just going to share this meme with you because guys, Griffin didn't know what lettuce fingers was. So
You're throwing me under the bus.
Lettuce hands, but I thought I would just show him some of the Bitcoin memes because Tesla sold some of their Bitcoin, and that was announced yesterday on their call or whatever. But yeah,
by the way, I think it's awesome that they are doing that though.
Oh,
that they're like even accepting Bitcoin though to buy cars. Like that's insane.
The moment that like that was the last signal for me where I was like, okay, Matt's getting laser eyes this year. I see what's happening. But I guess what I wanted to explore with you here, and we'll chat about NFTs in a second, and I'll show you something that'll probably make you cringe. Okay. But one, I guess, any general thoughts or opinions, and if you just don't even know enough, that's cool too, but on influencers pushing specific tokens or NFTs and things of that nature. And the reason I bring it up is I'm a huge fan of Gary Vee. He's got a NFT he's dropping on May 5th, 2021, and I'm planning on gambling on it in a big way. But I know that I'm gambling versus, again, I would encourage everyone that's watching this live stream, you're much better off get that first rental property or stack your first Bitcoin or hit your first 6-figure portfolio before, like stock portfolio before.
So you are going to buy some NFT from Gary?
Yeah, I'm going to buy directly from Gary because, and here's my thesis here. I think a lot of content creators right now are raping and pillaging their audiences with NFTs, with tokens, with BitClout, and all those random things that may or may not be scams.
It's like everywhere. Honestly.
Yeah, I know.
And so many of those.
I've been disappointed sometimes with people, and I understand that some people don't even have a financial stake in it. But again, I think unless you've done your research, just because there's a coin about you, it's dangerous to even retweet that shit or share it just because as an influencer, I think you've got a certain level of duty towards your audience. And like some people are just going to blindly think like, oh, because it's got your face or your name or your brand on it, that it's a good idea. Yeah. But anyways.
Well, definitely. Yes, definitely. You have like your audience. You need to basically talk about stuff you actually believe in. Yeah, absolutely. I think like finish what you were going to say actually about Gary. Well, what is he going to offer?
Yeah, so we don't know exactly, but I've been watching this like a goddamn hawk. So I'd like to say I'm probably more informed than most. Okay. But NFT, this is going to blow your mind. It's going to be these drawings. Is my prediction. So for the last like 6 months, if you've been following him, he's been doing these hand-drawn drawings with kind of punny names, right? So Insightful Irish Terrier. But I don't know. He's probably drawn at least a couple hundred of these, right? There's whatever this elf is. And there's been a bunch of random things he's teasing. But what I do know is he's likely going to do a Dutch auction. It's probably going to be a 0.5 ETH floor that he's going to do in this regards. He's actually created his own platform, so very similar to what Larva Labs did with CryptoPunks, and I'll circle back to that in a second, but he's going to be doing very similar, so he's not even counting on an ecosystem like Rarible or OpenSea to be the platform where he sells, where people can directly interact with his website and MetaMask in order to acquire them. But the reason I'm comfortable gambling on Gary Vee's NFT, and I'm not saying anyone else should, is I just don't think he needs the money. I don't think he needs to rape and pillage his audience now. So I think that this is more a vote of confidence to the long-term utility behind potentially some of these tokens or pieces of art. And I'd like to think that that's the reason he's doing it. So for that reason, I'm personally bullish. I'm going to, we'll drop a handful of ETH on this and see what happens. And I'm also comfortable if it goes to zero and I can never sell it, chalking it up to a funny story of that time that, I bought a Gary Vee.
Took place in history, honestly, kind of. It's like, these are types of things that are so brand new to everyone, and it's hard to even wrap your head around it in a sense. Like Gary Vee, I would think that his NFT is going to have a lot more value as well. I agree than the 99% of every other one. Because I went on some NFT platforms, and the thing is, it's just so saturated that to me, because there's nothing behind it, right? Like at least an altcoin can have some form of good project behind it. Same with stocks, obviously, as a company. NFTs, though, like it's literally anyone creates anything, and now it has value in the market.
And it's fascinating to see the desire for the speculative nature of the market, right? So
maybe I'm just not a visionary enough. But
I think I can make an argument either direction on NFTs right now. So I'm of two minds. So I'm comfortable walking that tightrope. But I think at the same time, it's also not hard to see similar in the stock market, right? With SPACs, special purpose acquisition corps. Like they seem to be right now a blank check of just like, we're going to buy things. And people are like, well, goddamn, I need in on that. He's going to buy some shit. And now I actually do like some of the structure behind the SPACs and the fact that they do distribute the money back out if they don't act upon it and things of that nature. But I'd be shocked if we don't find out, whether it's 5 months or 5 years from now, that a lot of this, it's hard for me to view it as anything other than strip mining capitalism, right? Where like a lot of the concepts aren't necessarily to take good businesses and build a better business. It's just to take assets, smash them together, and then hope that the market's going to reward us better. I also see very similar with a lot of the initial coin offerings, a lot of the NFT projects and tokens and things of that nature as well. So I think what's even more fascinating is just as money continues to be less and less physical, it seems like our attachment to it has just really evolved, in my opinion. And I see individuals that presumably are betting or staking their entire net worth on buying a CryptoPunk or on buying a Tesla stock or whatever it happens to be without really having any underlying investment thesis behind it, any long-term planning. It's
because you can get so caught up in like emotion and communities, right? Like
yes.
you go
community's big.
Exactly. Like you get into community, like pretty much every stock too has like multiple Facebook groups where they're literally just the whole time talking about it, and it's like bullish forever on each one. So it's very easy to go in and kind of not do a full investment thesis that has to do with you as well, right? Like what is my take on this company? Not just like actually the fundamentals, but like why am I buying this company for my portfolio? And it seems like a simple question that I ask myself all the time, but it does not seem to be something that people take in mind. So anyways, we're definitely going crazy fast with so many things. NFTs, like how long ago did they even start talking about that? A couple months. Like it came out, the first time I heard about it was when Logan Paul dropped his NFT there. And I couldn't believe how much money people were paying for these. I mean, yeah.
Well, yeah. And like,
Did you buy one? Did you buy one, Matt?
One of his? No, I didn't. I'm not even saying like, there's probably a version where I could have got on board with buying one of his. I wouldn't have trusted it the same way I trust Gary V's brand. But I also wouldn't have initially suspected him of just wanting to rape and pillage his audience. I'm glad I didn't necessarily participate. I haven't followed up on how it actually did, but I know initially it lost some initial momentum. But I guess like in theory, NFTs have been around a while. Like I can remember people talking about them, more the concept in 2017. But like, I swear to God, I can remember someone talking to me, I want to say it was early 2018, explaining CryptoPunks to me and me being like, oh yeah, that's kind of cool. And he's like, no, dude, like you can literally like go claim them for free. Like, it's this awesome thing and da. And I was like, yeah, I don't know. Like, come back in a few years. And so I kind of stopped paying attention to CryptoPunks. And, once they started making the rounds again with the Pauls dropping NFTs and other famous influencers, I was like, I wonder what's going on. And then I saw Gary Vee mention CryptoPunks once, Kevin Rose, Alex Becker, and a few other influencers I follow. I was like, let me go check on it again. This is where they currently stand, Griffin. So the cheapest CryptoPunk you can buy right now would set you back about 58,000 USD. And the most valuable one that just sold earlier today, like the biggest trade today. And so again, like what's fascinating about this, and maybe we'll go down a rabbit hole if you're interested, is the amount of data behind these though. So like you can actually see so much more information, in my opinion, than you can about the stock market on these platforms. Just a side note though, this dude sold today for 1.7 million, 667 ETH. And these are the top 7 sales from just the last week, right?
I mean, the guy, he's pretty dapper looking CryptoPunk.
He's got 6 straights. 6 traits, I'll have you know. So that's apparently rare. And I've done some research on this. But what's fascinating is we can see that in the last 7 days, $18 million of punks have traded hands, right? We can see what the primary sales have been. You know, I forget exactly how I can change this, but I can even change this from weekly to, they no longer do lifetime, but I used to be able to do like lifetime, right? I can see that the last 30 days, we've seen $87 million in sales volume for CryptoPunks.
So I'm like really not familiar with these, to be honest, just because I spend all my time researching other things. So these CryptoPunks here, you're on, what was that website called? It was called...
This one here is non-fungible. So it's just kind of like
is it like an exchange? And it's just for...
It's more of like a compository of information about different NFT and crypto markets. And things of that nature. So you can track different popular projects. Now, CryptoPunks is one of the most popular projects. And so they've even got like these performance maps that will help you kind of assess where it stacks up versus other NFT projects. But one thing that to me is fascinating that always was one of my frustrations with publicly traded markets is, you know, we may have rules about insider buyers and restricting information and insider trading and things of that nature. Whether that actually happens in real life, I may be just a little bit too jaded to believe it. But what's fascinating about this shit is the level of detail you can get. So we can find out that, you know, like this punk in particular, he's got a chin strap beard. There's only 282 of the 10,000 of those that exist. But I can see the entire transactional history behind it. So I can see that it was originally claimed for free back June 23rd, 2017. Sold for the first time in September 2020 for 1.4 ETH. I can track the individual account holders, but again, right now it's sold by this account.
They were actually free back in the day.
And that's what's fascinating about it is that it's truly just us being stupid apes that gives it value, right? Just our natural tendency for rareness or uniqueness. But then what I can see is all the punks he currently owns. I can also see the price he bought all of his punks at. I can see the price anyone's bid on any of his current punks. I can also see the history of all the punks he's sold and bought over the period of time, right? And so, again, I can then track down his Ether wallet on Etherscan. I can literally track money coming in and out of his wallet, right?
Yeah, so there's way more transparency. That's for dang sure.
I can see what wallet, like, again, if you keep going down, like you could eventually start tracking like what wallet he got other money from. And you could eventually, if you really wanted to figure out whether he's doing related party transactions, you could probably track that down with enough deep diving into this data where, again, there's just nothing like that on the public markets. But what's also fascinating, again, like I can jump over to his OpenSea account if he's got it linked, which he does. I can see everything else he owns on OpenSea. Again, I can see the prices he bought it for, you know, if there's anything that he's currently got for sale, if there's anything he considers particularly precious, all those things. But taking it one step further, if we go back to accounts, I can also track and see who owns what. So I can see this account owns 440 of the 10,000 available. This account essentially has 4.4% of the market. I can then see every single punk this account owns. I can also see all the history of how it acquired.
That's nuts. Like that's millions of dollars right there.
Yeah. And so I'll blow your mind in a second here by going to one of the popular accounts. But let me track down, like, for example, Pranksy. And Pranksy is a very popular crypto punk enthusiast, although I think he's been, I don't know if it's a he or she, but they've been selling off some. So maybe I'll actually go and check out Von Mises instead. But I think he also trades a bit. So opening up, that's his OpenSea. So opening up Von Mises' account here on CryptoPunks, I can see he currently owns 35. But what I can also see is how much he spent buying punks. So I can see he spent $907,000 acquiring punks. I can also see that he sold $1.4 million in punks over the history of this account, right? And I also know he's got 35 punks worth of inventory. So again, like at any point in time, I can really see deeply into what's going on.
So where's the value fluctuating from though? That's like, since they're all like individual, how is the value fluctuating for each individual one? versus like even any other type of stock or even Bitcoin stuff as people are buying and selling in the market?
Yeah.
Like, where's the liquidity in this?
Well, yeah, and it's a relatively illiquid market, right?
Yeah,
so there's definitely a risk there. And especially the higher the price goes, the more illiquid it's going to become, because like right now, it's a luxury vehicle in the US. That's the equivalent price, right? For the cheapest one available, 60,000 USD. Whereas, if you go back and look at like September 2020, probably almost none of them were selling for more than $5,000 USD, right? So it is a very speculative in nature. But what's also interesting is like, as we get into individual punks, like I can see every punk available for sale, but you can also get into these individual attributes. And from that, we can see the level of rareness. So it'll actually rank them. So there's different races. And depending upon the race, there's different numbers, right? So aliens, the most rare, there's only 9 aliens. There's only 24 apes. There's only 88 zombies. There's only 3,800 females, 6,000 males. And then each individual trait, you can track down here as well and see, what's the lowest price one is sold for, or what's the lowest price one's currently available for sale. But then because they've got different traits, you can also have different numbers of traits together, right? So that one I showed you earlier today that sold for 1.7 million, it's relatively rare because it was a 6 attribute, right? So there's only 11 of those in existence of the 10,000. Now, again, this is kind of, in my opinion, like whose money or whose line is it anyways, where all the points are made up and it's just for fun. Because, again, that's technically what this is. But the one thing that maybe some people would argue about this versus other NFT projects is most people either classify this as the very first NFT project ever done or one of the first 3. Depending upon what your definition of a NFT project is. But again, I know I just went on like kind of an entire TED talk here, guys, about CryptoPunks. I actually don't think any of my viewers should be buying these, but I do think it's fascinating. But then
so you're actually recommending that people don't buy it.
Yeah. Like, again, I right now own one, and it's really just a gamble for me.
A punk?
Yeah, it's been fun to see it go up in presumable value. But again, you don't make your money until you sell. But one thing that's fascinating is Gary Vee has been pumping these hard as well. So like, here's a tweet from him just from yesterday. Fun to look back at in 2030, these projects will be looked at forever. And so Gary Vee hasn't come out publicly and said whether he owns punks, but a lot of his influential friends seem to. And I imagine he does, but it's such an interesting moment in time where realistically, a lot of us either are directly or indirectly treating these like securities, right? Or stores of value or different investment type class assets. And yet, we've got one set of rules for one game, stock trading, right? We've got a specific set of rules that you have to follow if you're going to play that game. Outside of that game, it's almost the Wild West in every direction, right? Real estate, insider information, go for it, right? Like right now,
that is so true.
NFTs and things like that, insider information, go for it. And so it'll be interesting because I honestly do think that stocks are a disadvantage, one, because they're not on a 24-hour market cycle, and two, because of simply the fact that right now they're held to a different standard than a lot of other asset classes. And I've personally always had the unpopular opinion that restricting insider trading just gives a false sense of security to non-insiders. I think that it's still very rampant. I just don't think it's enforced very well. But that's obviously my personal opinion. But I think what is important is understanding that right now, these are kind of investments, but they don't have the same rules whatsoever. And so there's not the same safety in these sort of speculative investments either. Where like, I'll just tell a little tangential story here, Griffin, but the way I came into my CryptoPunk was legitimately someone accidentally sold it to me. So he had bought it for 19.99 ETH 2 days before he sold it to me. At that point in time, it was about 46 or 48,000 USD he had acquired it for. I don't know why, but somehow they accidentally hit sell and sold it to me for 11 ETH. So I bought it for like 26,000 USD. So he literally lost about 18,000 USD in 2 days.
How the heck does that happen, though?
Yeah,
that's
no
not
idea.
Very reassuring.
Immediately after, like, again, there are checks and balances here, but I don't know. Sometimes people joke about your little brother getting a hold of your laptop. Who knows what happened? But like, I can only imagine the frustration that person had, because right after that transaction happened, they bid 12 ETH. So they literally sold it to me for 11. And they were like, hey, can I buy it back for 12? Obviously, I'd been on the hunt for a long time for CryptoPunks, so we decided not to sell it. But it is important that everyone go in eyes wide freaking open into these markets, because there do be dragons. You can get slayed here.
Do be dragons. Never heard that. That's funny. Yeah, I think it's really interesting. I'm gonna keep my eye on it a lot more. Honestly, it's not something that I'm really focusing right now on real estate a lot more, and just over this past like correction with tech stocks, like I purchased quite a few different companies. I mean, we don't need to talk about that right now, but yeah, I think it's definitely interesting. Like you said, it is the Wild West, though. Like outside of stocks, yeah. The whole idea that even, like with real estate, you can call people up and like insider information is completely available. Like it's part of the game even. So it is interesting that that's so like frowned upon in paper markets, but.
Yeah, it'll be interesting to see how it evolves, because I'm sure they'll either try and force the existing rules onto the new markets, or they'll be pressured to take the old markets and allow them to have the new rules. So again, we'll see how it all evolves. But I guess circling back to what you were kind of touching upon there, I think it's also important for people to understand focus and discipline is key to any sort of success, right? So I don't think that anyone should be trying to become a stock trader, a real estate investor, and an NFT guru and a Forex trader all in the same day, right?
Yeah.
Like, and yet I see so many people fall victim to shiny object syndrome. I guess, have you struggled with that?
Yeah, 100%. Less in investing, though, I'll be honest, but in entrepreneurship, absolutely. I think most entrepreneurs go through that at the beginning. Yes, like way back at the beginning of our conversation when you were talking about your import business. Back in the day, I knew as well, like I want to be an entrepreneur. I don't know what I'm going to do or how I'm going to get rich. I used to tell my parents all the time, I'm going to be rich. And they were like, yeah, what are you going to do, bud? But it's okay. Like you don't need to know right away, but just the idea of trying stuff out. I mean, I used to sell, one of my businesses at one point was selling coconut openers on Amazon. And like, that was a legitimate business. Like I was doing that for like a good 2 years and I made some good coin from that. But yes, the idea of shiny object syndrome, of course, I have been subject to that, but that's a good point. And I would say you need to focus on one thing for minimum 6 months, if not a year, more than that, right? Like this YouTube channel that I'm doing now, how do you expect to gain any momentum in anything, your real estate investing, your knowledge in stock investing, any business, if you're jumping from one thing to the other all the time? So back to investing, like I think it is really cool and interesting that we have NFTs and people are trying to jump into different markets and stuff. And it's also a disservice that there's so many like fake gurus on the internet putting videos being like in front of a jet and stuff. Like that's not the reality. You and I, our type of content, like we're real people, and we're actually doing it. But
yeah, well, one of the running jokes we've got here, I think Peter and I, is that I just hope someday to be as popular as the Bitcoin bots in my comment section. I just hope that there's a day where I post a comment and I get 32 responses immediately and 1,000 upvotes.
I want to talk about this for a minute. It is horrible. Like I have wanted to make a couple videos on it actually, and I never ended up posting them, but it is brutal. Like I get way more comments on my videos, just fake people. Oh, Mr. or Mrs. whatever, help me invest.
Yeah.
Man, it's such a problem. It's a plague. Do people impersonate you on Instagram too? Every week I get a fake account impersonating me, messaging my followers, trying to scam them. It's just, scumbags.
I think that we literally got our first one ever this year. And I'm not even sure if I really remember it right now because I'm questioning myself on it. So I think that there's a difference between my niche and your niche from a scammer's perspective. And I think that the perspective is like paper assets, people are a little bit faster and loose with their money, where like real estate's kind of boring. Like none of these guys are expecting to get one wire transfer or one hot tip that makes them a millionaire. Like they're all expecting to like figure out how to get 10% better, where I think that like people that go into stocks or crypto, because again, whenever we've got a video labeled like this video, actually, I guess not this video, but the video we did earlier live today has the word crypto in it. Let's talk crypto. That one will just get flooded with comments.
Yeah. They're monitoring. Yeah. Same thing for me. Anytime I do a crypto related video, which is rare for me, but I'll get, just a huge influx of those types of comments. And yeah, like real estate content, that's true as well. Like that's one thing I have noticed on my channel. I love real estate. I love talking about it, but I talk about it so much less because it's not easily accessible. All right. Like people can't watch my video and then go on and buy a duplex right away versus for stocks, it's a lot more relatable with a lot less capital. So that's why I also talk about stocks a lot more on my channel. But as a result, that's a good point. There's a lot more room for scammers to prey on people, which is just sad. It's unfortunate, but oh well, hopefully people don't fall to that.
Yeah, absolutely. And again, at the end of the day, we each do have a responsibility for ourselves, right? So no one will ever care more about your money than you. The moment you're hoping someone else will, it's game over, in my opinion. That's why so many celebrities, so many sports stars get taken advantage of, is because they want to blindly trust someone. You have to care about your money. Again, it doesn't mean that you have to become a financial guru, but you need to care enough to at least
be financially literate. You need to know what the heck's going on. Totally agree with that.
So for anyone that's watching this live right now, appreciate you guys following along. We're going to do a quick little Q&A here where I'm going to bring up a couple questions. So feel free to jump in the comment section, hit us up with your questions. If you guys haven't subscribed to Griffin already, make sure you check out him on YouTube. I think we'll also have a link in the video description down below so you can jump over directly, give him a sub. I always love supporting, Canadian content creators. If you would like to see us collaborating on a regular basis, let's maybe call it once a week. Let us know in the comment section. Show us some love. Let us know, some name titles or ideas as well. Do you think there's a certain time of day or whatever that we should be scheduling it? Let us know. But I want to bring up this question first for you, Griffin, from Dan, which is, Can you guys talk about getting into owning your first investment property or investing property and how to get started? So if you were starting over, day one right now, knowing what you know, how would you go about getting started?
For me, if you're just starting, obviously you need to educate yourself, watch a bunch of videos on Matt's channel, my channel, know what you're getting yourself into. And then because you don't know the market that well, depending on what market you're in, for me, at least, I don't know if Matt would agree with this, but my real estate agent was paramount in helping me find my first property. Not just any real estate agent you see on a bus going by, someone who actually does invest themselves. So I found someone who also was a real estate investor, has multiple properties. So he knew exactly what I was looking to accomplish. So I would say that would be that. Like that's really important. Don't underestimate the power of a good real estate agent. And then also, literally just get dirty and look at the MLS every single day. Like you can't expect to find off-market deals right at the beginning. The first deal I bought took like 4 months of just searching. I didn't have much money at the time. I bought $180,000 duplex. Like I couldn't even afford to buy something more expensive. So yeah, just really knowing your numbers too, get a pre-approval, talk to a mortgage broker, have some credibility when you're approaching a real estate agent and kind of know what you're looking for. And it's okay that you don't know exactly what you're looking for when you're starting out. You'll learn as you're going along the process. And yeah, that's what I would recommend. Does that answer the question? Can you guys talk about owning your first? Okay. So, and about owning it, that's another thing. You can't prepare for that. Like you just cannot prepare until you're actually doing it. You guys are probably familiar with Bigger Pockets podcast. I purchased this book about managing rental properties. I'd listened to it a bunch of times, even before having a property. I hardly ever used anything from it because like you create your own systems for your own business as you go along. So yeah, to me, just actually doing it in practice is the best thing to do.
Yeah, absolutely. I see a lot of investors really struggling, waiting for the absolute perfect shot. And
yeah, you can't.
Yeah, especially when you're brand new to it. There's no such thing as a perfect shot, right? So I think that you need to stop falling. Like I see a lot of new investors fall in love with the idea of the perfect deal, the perfect ROI, the perfect cash on cash. And there's no such thing. It's always going to be dynamic. It's going to fluctuate. There'll be ups and downs in your investing journey. The key is to commit to the journey side, right? Commit to becoming a better investor, commit to learning more. Griffin's hit upon financial literacy earlier in the call. Again, I think that's just so key. And one of the big mistakes that I'll recommend you don't make, Dan, that I see almost every new real estate investor make, and you can let us know if you made it as well, Griffin. I was guilty of this, but they don't go to a networking event. They don't talk to other investors until they buy the first property. So everyone's suffering from this imposter syndrome where they're like, oh no, I can't go to a real estate networking event until I own a property. Oh no, I couldn't talk to a real estate investor until I'm a real estate investor. And yet I think the best time to talk to real estate investors is before you start, because at that point in time, every word out of their mouth you can learn from. Where again, once you get experience and stuff, like at this point in time, I actually kind of need to be careful who I'm talking about with real estate, or else I'm going to get no value from the conversation. So what are your thoughts, Griffin? And did you make that mistake? And do you think that's a mistake?
100% I made that mistake. I am just naturally, though, a very introverted person. So for me, like the idea of going to networking events is kind of difficult for me, to be honest. But yes, no, I didn't do that. And I do think that it does have a lot of value. Now, I do have quite a few people in my network that, are real estate investors. We chat real estate. And yes, that can definitely give you a head start, because they're going to tell you, especially if they're in your market, like they know exactly what's going on in their market, right? Like, so in terms of they can, like, I would say if you're already researching a bit, you have a couple properties that you have your sights on, and even if you're running by numbers with this individual, and they can quickly, probably in a couple seconds, tell you whether or not that's a good deal or not to do. Right. So although that's pretty difficult in this market where properties are selling within like a day, but yeah, just literally going out, making offers and getting experience. Like, people ask me these types of questions. It's kind of the same type of question that applies to everything though. Like to starting a business, starting a YouTube channel, investing in anything. It's just like, I can't give more like advice other than just you need to start and just commit to the process. It sounds just really boring and cliche, but it's just so true. Like, honestly, it is. Doors open up to you and opportunities will come to you as well once you have that momentum. Like now, I'm purchasing a property right now. I didn't even look at it. Like my property agent, of course I looked at it, but what I mean is I didn't research it, right? Like my property agent knows exactly what I want now. He knows my budget, sends it to me. Hey, yeah, let's do it. Here's the ARV on it. Let's go. Right. So like, as you build momentum in your business and stuff, you'll just become a more well-rounded investor.
Yeah, I think that's great advice. And again, guys, the key is just getting started, putting some sort of plan together, and again, fall out of love with the idea of perfect. So way too often people are like, I don't want to submit an offer unless it's going to be accepted. My humble opinion is you should probably make a dozen offers before you ever get one accepted. And if your first offer gets accepted, unless it's an emotional home purchase and you decide this is your forever home and you're going to raise your family and because emotional reasons, if this is a logical, rational investment, you should actually lose a bunch of offers before you get an acceptance. Like almost every single offer we make will never be accepted the first go. Right. And if we do, it's usually going to cause a moment of inflection for ourselves where we're like, did we overlook something?
That's
did we miss something? Point.
One of the second property I bought, the offer I gave, they just instantly said yes. And I was like, oh, dang. Like, yeah, I bid too much on it. Like, it's fine. But
yeah. And again, it's a tough market, right? Especially when you're dealing with on-market properties. Sometimes you need to be able to move fast if your market dictates that. But I see a lot of people that are just scared to make an offer because they're going to get rejected. I'd be scared to make an offer and have it accepted more than be rejected. So like, I think you got to go through that process of being rejected, of stumbling, of like, again, I've seen just about everything now at this point in time. So almost nothing scares me. Like I've been so sloppy in my paperwork where we had a realtor accidentally put the wrong address on a purchase and sale agreement. Neither the realtor, myself, nor the seller noticed. Until eventually my lawyer picked it up and he was like, hey, man, I know you're buying a lot of shit now, but you haven't even told me about this address. It turns out somehow the realtor accidentally put his home address in the field of the properties that we were buying and selling. And like, it turns out I learned a good lesson there. One, I need to be a little bit more higher attention to detail. And the second lesson is that Turns out when everyone's entering with the right intentions, usually this shit sorts itself out. But I can tell you in the moment, it can be a little scary when you're like, well, how nice is your house, Mr. Realtor? Because it seems like I might be buying it. So again, it's just so important that you be willing to make these mistakes and understand what's the realistic worst case scenario. So I see so many people worrying about, I'm going to buy a house and it's going to go to $0. I mean, if you literally buy a house and it actually goes to zero, I bought it for... Is that
something you seriously see people thinking?
Yeah, okay. There's people that are scared, like just this risk aversion, just a natural fear of almost everything, right? And again, if they take a beat, if they take a step back and they start thinking about rationally and logically, it's like, what do you think? Would someone pay anything just for the land? Yeah, I guess like there's probably some value in the land. Okay, cool. And then you start building down and you're like, do you really think the house is just going to fall over tomorrow? Well, no, probably not tomorrow, but it's old, right? And again, like usually it's just uncertainty that people are scared of, right? Once you start informing yourself, once you start shining lights on these dark corners, it becomes so much easier to navigate it. But when you're living in this world of just fear and having emotions and being reactive, that's really when you make huge mistakes as an investor, whether it's real estate or otherwise.
Yeah. No, I agree. And then just one last quick little thing for Dan. He says, getting into your first investing property and how to get started. I would say like for most individuals, I don't know, Dan, if you already like live in a home with your family or whatnot, obviously you wouldn't do this, but like house hacking was one of the easiest ways for me to get in. You get your foot in the door, you learn as you go along, you live in the property anyway. So you kind of understand, you get to know like tips of the trade and stuff. And then you can literally move out and rent it for more than what it was before. Like that's literally what I did in one of them. I kicked a tenant out and moved in, lived there for like 8 months. And now I rented it out way more expensive. And then that property is worth a lot more. So I think house hacking is one of the best ways you can also get into it. And also one of the best ways you can get ahead financially. Yeah. Let's hop to the next question.
Yeah, absolutely. I'm obsessed with house hacking. I think that if you're only going to take one piece of personal financial advice, other than spend less than you make, I think house hacking is the silver bullet to a lot of people's problems. So this ties well into blockchain Mac's question here. So tips for young guys wanting to invest in a property when house properties are inflating at this rate. I live in Northern Ontario. And so, yeah, I think house hacking is amazing for a variety of reasons. But the biggest one is we're reducing our overall personal consumption, right? The average Canadian spends 30 to 40% of their income on shelter. If you can find a way to get shelter for free, there's almost no way that your peers can catch up to you, right? Like your buddy can literally grow all his own food. He can not have a car, and you're still going to be neck and neck with savings.
That is honestly, is that the statistic? About 30 to 40% on housing? Wow.
Yeah, depending upon how we defined housing. So I will group things like utilities and property taxes in with housing, but essentially anything involved with your shelter.
Yeah, cash flow at the door for shelter.
Yeah.
And if that's rent, it's goodbye forever. But tips so he's in Northern Ontario. Honestly, blockchain Mac, I'm not super familiar with like investing in other regions though. I think Matt could offer more value to this question. Honestly.
Yeah. So the one thing I'll say about Northern Ontario to be aware of is like, I get it. You actually live there, so it makes more sense for you blockchain than a lot of people, but a lot of individuals naturally start drifting north when they're looking to buy real estate just because they're chasing returns. And, the equivalent, for Griffin's audience would be like buying that stock that pays 100% dividend, 100% payout. They've never paid a dividend before, but they just announced they're going to do it. Like there's a lot of people that fall in love with theoretical numbers rather than actual numbers. And so be careful that you're looking at actual numbers when looking at Northern Ontario, because there is unscrupulous realtors out there that will give you projected or pro forma financials rather than actual. And so they sometimes forget things like, you can't just jack up the rent, even though you can in theory on your nice little pretty pro forma. We actually live in a world that's not a vacuum. But Northern Ontario, the one thing you need to be careful of is looking at the demographics. So right now, pre-COVID, and things are kind of weird with COVID as far as like immigration and demographic shifts. But pre-COVID, there was only one real estate market in Northern Ontario that was projected to have a bigger population 20 years from now than it does today. So like, understand that to me as an investor, I don't like that. on the surface, right? That's Sudbury. Sudbury is the market that was projected to actually have population growth over the next 20 years. All the other 11 northern markets were projected to essentially tread water or maybe even slightly shrink. And Sudbury's also handicapped because they were really having a struggle of getting young people into the community. So right now there's an aging demographic there as well. So they're also looking at a potential demographic cliff if they don't get a bunch of young people in. Now, one little asterisk I'll say is during COVID, North Bay was one of the most searched cities in Canada. In fact, had the highest net migration of U-Haul trailers. So that means a lot of people presumably chose to move to North Bay. And I think one of the reasons for that is simply cost, right? It's a much lower cost of living area than anything else you'll find in the GTA or the Golden Horseshoe. But focus on fundamentals. I think if you can house hack blockchain, I would 100% house hack in Northern Ontario. What's great about house hacking is it's just one more exit strategy for you with that property, right? When we buy a house, usually, like if you just straight up buy a house to live in, your options are resell it or probably use it as a shitty rental because you didn't originally acquire it with the purpose of a rental. So the fundamentals probably don't make sense. When we buy a purpose property as a house hack, it usually is being bought as an investment first and personal use second. And what that means is it gives us a much larger spectrum of options, right? You can likely just re-rent it out if you decide to move or have a life change, and you'll still generate profit and presumably a level of profit you find acceptable. So that is really what I'd encourage you to go in regards to next steps there. But then also circling back to the original tip that we were giving to new investors, as well as to you, blockchain, is real estate's a contact sport. The more people you come in contact with, the more opportunities are going to come across your plate. The more you're going to learn, the stronger your network. All those things compound over time. But yeah, anyways, I realized we've been going on for over an hour and 10 minutes now. So again, if you guys enjoyed this, smash the like button, hit subscribe. Make sure you jump over and follow along with Griffin and his journey. I guess as we look to maybe wrap up here, Griffin, any general thoughts, words of wisdom, or anything you want to tease the audience that's coming out in the next week on your channel?
Sure. Yeah. Well, I mean, first of all, this was great. I enjoyed it. I think it was of value for sure. And if you all want to see more of this, definitely let us know in the comments. I will say this also, not to like plug myself here, but follow me on Instagram, because if we do end up doing this, I'll post probably once a week before the day of, sort of like a question box, and just yeah, like why not, right? That would be an easy way to get some topics of conversation that the audience wants to see. So yeah, for me, it's just Griffin Milks everywhere, Instagram, YouTube. And yeah, I'm also going to be dropping, like Matt just said there, a video on my channel. What are we today? Tuesday. So on Thursday, about all the different properties that I was able to acquire and my strategy with it. And I think that would be a really good thing for even blockchain Mac to watch in terms of property of house hacking, essentially talking about that at the beginning.
Awesome. Love
so
it.
Yeah, this is good.
You may not realize this about my audience, Griffin, but I know them well. They're numbers obsessed. So could you maybe tease them either number of doors or number of units or number of buildings? You know,
sure.
What's your portfolio look like that they're going to get to see on Thursday?
Yeah. So first one was a duplex. Second one was also a duplex. So we're at 4 doors. Third one was a 4-plex. Then a duplex I'm converting to a triplex, and then a triplex I'm converting to a 4-plex. Those 2 last ones are in the works right now. I'm working at doing those renovations. Or a heck of a lot more than just renovations, but yeah. So what is that? It's like,
I think that was 13 units, or maybe once you convert it, it's 13.
Something like that. I have sold off 2 duplexes though, the 2 first ones.
Oh, okay, gotcha.
And I've just rolled that cash into new deals. But yeah, and then I have this house here. Honestly, I did the house hack. It's amazing. It really is. But for me, like I was in this little space. I needed a studio and all that. So I ended up having to just bite the bullet and buy a property, like a single family house. But I'm still totally looking at it as an investment. And that's something I talk a little bit about as well on my channel. So definitely check that out.
Awesome. Sweet. Again, appreciate you jumping on, Griffin. If you guys enjoyed this, let us know in the comments. Give us some name suggestions. And if you think there's a different time and place we should be, let us know that as well. But otherwise, yeah, we'll probably see you guys next week. And I'll definitely see you on the next live tomorrow, guys. So appreciate everyone watching. And make sure you jump over and watch Griffin's video on Thursday. See you guys.